What's up everyone? In this video, we're going to be talking about whether or not Teladoc stock is a buy. We're going to be looking at Teladoc's fundamentals, their technicals. We're going to be talking about some bad things about Teladoc and some good things, and I'm going to be straight up with you guys while I'm doing it. So we have a great video today. Teladoc is growing very rapidly, but there are definitely some pros and cons with this play. So stick with me to the end of the video. There's actually a lot of great information, so actually stick with me, but let's get right into it. So if you don't know what Teladoc is, basically it is a telehealth and telemedicine company. They offer a lot of services, but I guess you can say they are most known for where basically, you can go online, meet with the doctor, get a prescription if you need, and it's just a very easy to use process, and they are growing at a very rapid pace. Like I said, they offer a wide variety of services, but basically you can meet online with a doctor, and it's a very convenient process both for you, for the patient, as well as the doctor, and it's definitely growing. So looking at some of Teladoc's fundamentals. Teladoc, like I said, is growing at a rapid pace. In 2018, this company had $418 million in revenue. In 2019, it had $553 million in revenue. In 2020, the company had just under $1.1 billion in revenue. For 2022, they are set to have over $2 billion in revenue. That's crazy. So they're clearly growing at a very rapid pace. And like I say in almost every video where I'm looking at fundamentals, it's relatively easy for a company to go from, let's say $2 million in revenue to $4 million in revenue. But it's a lot harder for a company to go from $500 million in revenue to $1 billion in revenue to then $2 billion in revenue. So that's hard to do. But either way, what I do like about this company is that, of course, they did get a boost from COVID, and that's great for them, but they were growing rapidly before COVID even happened. For example, in 2013, their revenue was $20 million. 2014, $44 million. 2015, $77 million. 2016, $123 million. Like, they just keep doubling and doubling and doubling, and they're going crazy. So that's awesome. We can see that their total assets, total liabilities, and total debt skyrocketed in 2020. One important thing to know is that they acquired Livongo for $18.5 billion in 2020. Not gonna lie, they kind of overpaid for that deal, but still, they acquired Livongo, and that definitely affected their financial data from 2020. So that's just one thing to keep in mind. We can see on their quarterly revenue to the left over here, they're constantly growing, which is huge. Even though, I guess you can say the pandemic is ending or it's slowing down, their revenue continues to climb, and that's huge. So their fundamentals are mixed in the sense that their revenue is growing at a great pace, but the problem is that their net income is pretty deep in the red, as well as their cash flow. So that's definitely a concern. But then again, they are a growth company. It's not like we're looking at Coca-Cola here or Google or something like that. Like, Teladoc is a growing company. It's in a critical growth phase, and they're in a growth phase. Like, a lot of times you don't see growth companies profitable in their early stages. And you can see the same thing about a lot of companies, even like Tesla. Like, Tesla's first profitable year was in 2020. So that's just one thing to keep in mind. But anyways, their fundamentals are mixed in the sense that they're growing a lot, but they definitely have a profitability concern. Some other important things to know, like I said, their revenue is growing. They're expected to have over $2 billion in revenue for 2021. Teladoc reports earnings in a couple weeks, so that is something important to keep in mind. Once they report earnings, we will get more clarity on how they did in 2021. Overall, they're doing pretty well. We can see how this little graphic here represents how Teladoc has evolved over the years and how they have been growing. We could see from 2015 to 2021, they have increased the variety of services that they offer, but they have also increased the markets that they operate in. We can see that they expanded into France, United Kingdom, Canada, and they're growing, like I said, market-wise, but they're also growing in the services that they offer. So that's a huge thing. Another thing I really like about Teladoc is they're big into artificial intelligence and data analytics, which in my opinion will be huge for the future. So anyways, that's the main thing to know about Teladoc as a company in terms of how they are doing relative to some of their competitors. According to this Seeking Alpha article, this was written, this was written in 2021, August 2021, so it's slightly dated, but not too much. It's only February 2nd of 2022, so, came out relatively recently. But according to this article, Teladoc has a 78.86% market share in the telemedicine market. So that's pretty big. This is only for the US though, so keep that in mind, but it's still a dominant, I guess you can say, position. Another thing, if we scroll down, we can just see how telehealth usage overall has been performing over, I guess you can say, over 2021 and a little bit into, over 2020 and a little bit into 2021. We can see, obviously, we had that giant increase when COVID first hit. But what's good to see is that a lot of the people who started to use telehealth and telemedicine companies when the pandemic hit, a good amount of them stuck around. So that's always good to see, and it's just good for the telehealth/telemedicine market overall. So that's the main thing to know about Teladoc as a company. One other small thing to know is that Teladoc is actually Cathie Wood's second largest holding. So Cathie Wood is, she kind of became famous over the past couple of years with her great ETF performance, especially in 2020. I know Cathie Wood's ETFs have not been performing too great recently, but still Teladoc is her second largest holding, so you can take that however you want. But looking at Teladoc's technical levels, we can see that the chart has been bad. It's been really bad over the past 2 years, we can say. The stock went from $308 all the way down to $66.50 from, what is this? This is like, February of 2021 to February of 2022, it just fell dramatically. And part of that is because, I guess you can say, some COVID stocks, like even Zoom and many others, as well as Teladoc, were relatively overvalued over the past year or so because of all of the hype we had going on in the market, but also because of the extremely low interest rates. So now that rates are starting to rise, it really hurts the current day valuations of companies that are set to grow a lot in the future. So that's kind of why we're seeing Teladoc fall a lot in terms of charting. But something good to know is that if we zoom back just a little bit, back in 2016, this was a $9 stock. It hit highs of 308, but it's still holding its ground right around 77. So overall, it is on a strong uptrend. And another really good thing to know is that Teladoc was growing rapidly before COVID even started. Like I said, in 2016, this company was trading for around $9, and in 2018, this stock got all the way up to like 89. So that's a pretty big pop-ups, and it was already growing before COVID even started. So that's always good to see. In terms of main levels to watch for this company, it's kind of in the middle of its range. There is a gigantic support right around $60 a share. There's also more support around $40 a share, but realistically, I don't know if we're ever going to touch that again. Really depends on how their upcoming earnings report does. Their upcoming earnings report is on February 22nd of 2022 after market close. So just keep it on your radar. Earnings are coming up soon, so depending on how that earnings report is, it will definitely bring in a lot of volatility with this company. In terms of resistance, there is another gigantic level right around $100. This is a resistance level. After 100, there's also a pretty big resistance right around 120. So definitely keep that in mind. Main supports are $60 and $40. Main resistance are $100 and $120 per share. So overall, it is on a strong uptrend. It's just over the year, it's been really struggling for a variety of reasons. But overall, I do like this company to buy and hold. The industry that they are in is growing at a rapid pace, and I feel like it's good in the sense that it's kind of a win-win for the people who use Teladoc as well as the doctors and professionals who are on there, in the sense that with all the craziness that we have going on in the world right now, with all the viruses and everything, and just everything going on, there's been a shortage of, I guess you can say, workers, especially in the healthcare industry, especially. So I feel like Teladoc makes it convenient for the patient, but it also saves doctors valuable time that they need now more than ever. So I feel like with everything going on and just the way the world is really shifting to, a digital everything, basically, I think Teladoc will be in a good position for the long term. I do like them, but if we are being fair, their fundamentals are not the best right now. But then again, all of the growth companies that we talk about nowadays, like Tesla and many other companies, their fundamentals were not amazing when they were in critical growth phases either. Tesla was put in very hard positions at many points throughout its history, right? But they clearly overcame those adversities. So that's awesome to see. And anyways, Teladoc, yes, they have a lot of growth potential. It's just important to keep in mind that their fundamentals are not what I would call grade A right now. But then again, you don't even expect a growth company to have grade A fundamentals when they're in a growth phase. So that's just one important thing to keep in mind. In terms of patients and doctors and everything, my previous point is that obviously, if you have a minor problem, you don't need to go to see a doctor in person to fix that. And, by using Teladoc, you could save time as the patient, but you could also save the doctor time. But then again, obviously, if you have a broken arm, you're not going to use Teladoc. So the main point is that Teladoc kind of saves time for the patient as well as the doctor, and it's in a growing industry. So I really like that. My concern is that their fundamentals are a little rough right now. What I also really like about Teladoc and the industry that they're in is that they are in a recession-proof industry. Whether the market is going or just the economy, whether the world is doing awesome or whether it's in bad times, you can say, people always need healthcare. That's never going to end. So the industry they're in is pretty awesome in that sense. They're growing rapidly, like we already showed in the Seeking Alpha article. Their market share is pretty dominant, according to this article. They've been growing before COVID even hit, which is huge. I mean, we can see their revenue back in 2013 was $20 million, and in 2019 it was $553 million, and that was before COVID hit. So it's clearly growing, and I just like it. So overall, I do like it for the long term. Just keep an eye on these fundamentals because they will tell us more about how the company is doing. I like it for shares. I like it for short put options. When I say short put options, I mean cash secured puts, sell to open puts, not buying puts. So I like them for short put options. I like them for shares. Calls are decent right now. They're not the best, and I say that because of the high implied volatility. Basically, because the stock's been all over the place, the market makers are expecting a lot of volatility, and they're pricing the calls for that. So calls are not the best right now. Shares would be ideal, as well as short puts. So I hope you guys learned something from this video. Let me know what you guys think about this one. Do you think it's a good buy? Do you think I'm missing something? Do you not like this company? Do you not like the stock? If you were to buy this one, let me know at what price you would buy it. Besides that, thank you guys so much for watching today's video. And if you are looking to analyze any company like I analyzed Teladoc today, definitely check out that first link in the description down below. You can type in any stock ticker and instantly get access to 10 years worth of financial data. The dashboard is brand new, and I guarantee you the price will be rising soon. We have some awesome things in the works with this one, and it's an awesome dashboard. You can see so much data. You get full access to the financial statements. And like I said, the price will definitely be rising because we're adding some awesome features. But besides that, thank you guys so much for watching.